Welcome to No Flipping Excuses with Jason Lucchese. Jason Lucchese was the guy voted least likely to succeed by his high school peers. Today, Jason's a real estate flipping ninja Jedi Knight assassin who's taken his drive, street smarts, and never give up attitude and converted them into a real estate flipping business and freedom-based lifestyle. After years of being chained to a cubicle in the mortgage business, watching his coworkers go bust, customers go bankrupt, and his hairline go bye-bye, Jason decided to make a change and blaze his trail to the flipping promised land. Each episode, Jason shares real-life real estate case studies, tips on how to find, finance, and flip deals, and mindset tactics he uses every day as a real estate investor, mentor, and leader so you can free yourself from the shackles of corporate America, fire your boss, and live the life you've always dreamed of, right flipping now. Here to share the truth about flipping houses, finding sellers, delivering buyers, real estate investing without the reality show hype, and all-around general business badassery. Your host, Krav Maga enthusiast, husband, and father of 3, Jason Lucchese.
Hey there everyone, it's Jason Lucchese and welcome to the No Flipping Excuses show. I am so glad that you're here with us right now. I've got a really good friend of mine that is joining me for this particular episode. And before I introduce you to him, I just want to do one quick thing. If you are brand new to the show, you are in store for something really, really incredible here. Now, if this is your first time, make sure you listen to this episode all the way through. At the end, go ahead and leave us a 5-star review if you think we deserved it. Our guest here will be a little mad if he doesn't get a 5-star. Totally joking. But also subscribe to the channel too. If you're back with us, you're returning, you've loved the show, make sure you're a subscriber because when we upload shows, you get to see those shows first before anybody else. And make sure you leave us a review. Our chief ninja officer, Mr. Michael Bretthauer, is standing by to make sure that we're getting only 5-star reviews. So make sure you're leaving us 5-star reviews. But in all jokes aside, we've got an awesome show here today with my good friend Matt Motil out of Cleveland, Ohio. This dude is a #1 best-selling author. He's a real estate investor, just killing it in his market. And I wanted to bring him on because he's just doing some phenomenal stuff here. He's making money, helping people, and just doing some incredible things in the Cleveland area. So without further ado, Matt, how you doing, buddy?
Good. Thanks for having me on the show.
Absolutely. Absolutely. Matt and I met each other through a mastermind group, and Matt was, I swear, him and I came out with our books, our ideas right around the same time, but Matt really implemented and came out. We're going to talk about his book here in a little bit. We'll talk about it here in the later, but he came out with his, and he kind of kicked me in the butt to get mine done. I saw his come out, and I'm like, man, I should be done with mine by now too. So Matt's a major action taker, and one of the things I wanted to bring him on here is, for his real estate. He's doing some awesome stuff there. So Matt, let's talk about how you got started as a real estate investor, dude.
Sure. Well, I kind of stumbled into it a little bit. I went to college like most, people that are in our generation are kind of herded into the, it's like, oh, you're an independent thinker, you should go to college. and I went to high school just north of where you guys are in Goshen, up there near South Bend.
Yeah.
And in a small farm country town, it's like you either stay home and work on the farm with the family, or you're going to go to school. And that was kind of the two categories that everybody went through in Indiana, right?
Yeah.
And so they were like, well, you're good at math and science, you should be an engineer. I'm like, okay. And I went to college and I ended up with a mechanical engineering degree. And when I was in there, I kind of got the entrepreneurial bug, and I started reading books on like wealth and, accumulating wealth and because I knew that there was people out there that were just crushing it.
Yeah.
And I didn't know how that worked because, when you look at leaving school and you're going to make a salary, you go, well, that's not really crushing it. So what are these people doing? And so, of course, I read Rich Dad, Poor Dad, which is like the gateway drug to real estate investing.
Right.
And even though it's not necessarily an investing book, I mean, obviously that's how Robert Kiyosaki made his money. And I was like, yeah, I'm going to do real estate. This is cool. And soon after I read that book, my parents bought my brother and I a house to live in right off campus because they were tired of paying room and board for us to live at Toledo.
Yeah.
And then they moved away. And so it kind of fell to me as the oldest son, so to speak, of I would move our friends and fraternity brothers and things like that into the spare rooms, and I would collect rent and I would pay the bills and I would make sure the grass was cut and all that kind of stuff. And years later, I look back and I'm like, well, I was basically managing property for one rental, that my parents owned.
Right.
But when I got out of school, I really focused on, and I didn't realize that you could make money in real estate or that you could get into the game without any money.
Right.
So I really had this mindset of, okay, I'm going to go get my degree. I'm going to make money in my career. And then I'm going to use that money to do deals. And I really didn't know exactly what that meant, but that was kind of my thought process. The problem is, and I'm sure you can appreciate this, is when you have a main hustle and you're trying to do something as a side hustle, your side hustle gets put on the back burner a lot.
It does.
And that was really what happened for me was I would try to get into something and then it was like, okay, life got in the way. But what I really started doing was I started basically house hacking. I bought my first house at 22.
Oh, nice.
It needed a little bit of work, but I needed a place to live. So I was like, well, I'm going to buy this. I'm a little handy. YouTube wasn't what it is today back
Right.
then, but it was like you could find a lot of stuff on the internet, and I was like, and I'll just figure it out. And so that was really kind of my hobby. I would go work, as an engineer in construction. I'd come home and work on the house. I'd work on the house on the weekends and stuff. And so we fixed it up, sell it, make a profit, roll the profit into the next one. And we kept doing that. And this was in the early 2000s. And we did that all the way up until the point where we really hit a jackpot in Phoenix because I ended up in Phoenix.
Oh, cool.
I sold a house at the peak of the market in Phoenix, Arizona. And unfortunately, yay. The bad news was I rolled 100% of that equity into a new build construction.
No. Oh, no.
Literally right at the peak of the market. And so the market we were like right here, and we rode it a little bit further, and then it tipped and it went down in Phoenix almost as fast as it had gone up. And at one point in time, so when the market peaked, that house was worth like between $500,000 and $600,000. And I had rolled probably about, I don't know, $150,000, $175,000 of equity that I had made on the last deal into that one. So my payments weren't crazy high. And we were sitting there and I'm like, do we really need a house this big? Do we really, maybe we could cash out right now? And literally we thought about it for like 3 months. And in that 3-month period of time, that house lost like $150,000 in value because we had an agent come in. Like I said, we waited for about 3 months and we had an agent come in and she goes, well, I think I could get you 488. And I'm like, I almost wanted to be like 488. Like this house is worth 600.
Right.
And I look at, playing Monday morning quarterback, right? I look back on it and I go, God, I should have taken 488 because when the market finally bottomed out in Phoenix, we did a deed in lieu of foreclosure on that house, and it went and sold for like 175.
Oh, geez.
And that whole area of Phoenix had been bought up by California investors. And so for every one person that was actually an owner occupant in our neighborhood, there were 4 vacant homes that investors had bought cash just to ride the market. And when the market bottomed out, they just let them go. And so there was close to 80,000 vacant homes in the valley in Phoenix when the market tanked.
Yeah.
And you couldn't get anybody to rent them. You couldn't get anybody to, and if you did rent them, people would be like, well, I'll give you $500 a month. And you're like, this is a 3,000 square foot house. And they're like, hey, there's 8,000 just like it. So,
yeah,
and it was totally a renter's market. And when we moved to Cleveland, we had put a renter in there at a price that would actually pay our mortgage, and so we were kind of excited. But when the market continued to spiral out of control, the tenant moved out, never paid us, and we were stuck. We had 2 mortgages at that time.
Oh man!
And my wife at the time, we're now divorced, but she wasn't working. So we were a single income household, and it was like, I can't afford 2 mortgage payments. And so it was what it was. But we really started getting into the rental game once I had moved back to Cleveland. And then obviously realized that you didn't need to use your own money to do deals. And then, kind of found wholesaling.
Yeah.
In the last year, and I know you personally helped me out with some deals when I first got things going there, and so it was then kind of navigating the water of like I was a realtor, and how do I legally wholesale so that I'm not going to get myself in trouble or my real estate license in trouble or my broker in trouble, and we've kind of switched things up since then. I'm no longer a realtor. And it just makes it a whole lot easier. And we do wholesale a little bit, but really we're back to like, we've kind of come full circle, and took us 2 years to kind of like do this weird, what do we want to be when we grow up game.
Right.
And we ended up back at, we really want to be buy and hold investors. And now what we do is we use private funds. We have a lot of private lenders who work with us, and we use their money to take deals down. We pay them a really healthy interest rate, and then we restructure the debt after we can season it and get a full appraisal on a deal, usually like 6 to 9 months in. So the investors are into a deal for less than 12 months.
Nice.
We pay them a really healthy return. We recycle the deal through the bank or through a commercial lender if we're doing like a blanket loan with a bunch of properties, and then they get their money back, and we can just keep doing it all over again. And so that's kind of what we've been doing lately. And it works out great, because what we found with the wholesale piece was, we had a lot of people that were like, oh yeah, I know about rentals. I know what it takes to be a landlord. And then they would get into a deal and they were like, well, I didn't realize this or that or this or that. And then the thing was, it was always my fault. And they were like, well, you didn't tell me about that. And I'm like, you told me you knew what was going on. You know what I mean? And so we just said, you know what? If we could take all of our cash buyers and convert them to private lenders, like we eliminate all of that.
Oh yeah.
And there's still people out there that are like, no, I want to own the asset. And it's like, great. But we're very clear on, here's what we do. Here's what we don't do. Here's how we will work with you. Here's how we won't. I mean, we had to get very, very crystal clear on what's everybody's expectations.
Right.
So that, because it's a relationship business, right? And at the end of the day, I don't want bad relationships. It's the last thing I want. And I really don't like to do damage control either. Like, I like it simple.
Exactly.
Yeah. Like, I'm like the most low drama, low maintenance guy you'll ever meet. And when people get dramatic or people want to create drama, I'm just like, no, you're out.
That's too funny. But before we hop into our next segment here, one of the things that I wanted to point out to folks is, what Matt just went over, a good illustration. If you want to see this movie, it's called The Big Short. It really explains a lot of what happened during that crash, because I was in the mortgage industry at the time, actually doing subprime loans for people that, didn't really have great credit. And when all of that went out from underneath us, it was a pretty big scare. I had no idea what I was going to do. I actually had to do a deed in lieu on a property that was a rental for me too. And I remember doing loans in Phoenix, and I remember seeing the appraisals the year before. I remember this one property like it was yesterday. It came in like in 2005 for 125 grand. And then in 2006, it appraised at like 260. And I was like, how in the world did your house go up that much? And you didn't even do anything to add value to the property. So it's pretty crazy, but I highly encourage to see that movie, The Big Short. Such a good movie. And it's a phenomenal cast too. They really do a good job. I'm not sure if you saw the movie. I know there's the book, but I didn't read the book. But they do a really good job of explaining the terms and the jargon, because a lot of
I think it's pretty accurate.
Yeah, especially.
I think for guys like us that lived it, you watch it and it's almost painful. Like you're like, it makes you really uncomfortable because you're like, I lived this, you know, but it is very accurate. And so if you're out there listening or watching or whatever, and you go, what really happened during the housing crash, like that's a good place to get
Yeah.
a lot of information in a very short period of time.
Oh,
because
yeah.
it is pretty accurate.
Yeah, because especially when they went down and visited the homes in Florida, it's like it's just like you said, all these investors were buying these homes, especially in Florida and Arizona and Nevada.
The non-recourse states.
Yes, yes, and all these homes would be vacant. Like it would be like every 4 houses, and some of these people would still live in the house, and they'd be like, "Yeah, the owner stopped paying the mortgage. I got an eviction letter from the bank," and they just wrote it out. And most of the time, these people would pay rent free for like 12, 18 months. And gosh, and then the short sale market came, which that's a totally different episode for us to hop into. But here's what we're going to do. We're going to hop into some other stuff here in just a second. We're going to go over some of the marketing stuff that Matt's using, why cash flow is such a huge thing to be doing right now, and talking a little bit about some of the wholesaling stuff. I know Matt mentioned he used to be an agent. Is that something that you really need to be? We're going to discuss that here in just a little bit, so stay tuned. We'll be right back.
Have you been struggling to close your first real estate deal? I hear this all the time, and you're not the only person in the not having closed your first deal boat. I was there, and the feeling is horrible. I can tell you on page 103 of my book, Right Flipping Now, I address how you can easily overcome closing your first deal quickly and easily without using any of your own money or credit. My first deal closed when I was on vacation. I made $26,000. You can do the same thing. Grab a copy of my book at getmyflippingbook.com and you can get your first deal closed for massive profits. I have copies of my book available at getmyflippingbook.com, and you can have a step-by-step plan for making profits on your first deal, closing within the next 30 to 60 days. Go to getmyflippingbook.com. That's getmyflippingbook.com. www.getmyflippingbook.com.
Hey there, it's Jason Lucchese, and welcome back to the No Flipping Excuses show. I've got my good friend, Mr. Matt Motil, with us out of Cleveland, Ohio. He is a big-time real estate investor in that area, and he's doing a lot of stuff with income-producing properties. He's also doing some wholesaling as well. So I wanted to talk to him. We talked a little bit about, some of the things how he got started, some of the things that he's doing right now in his business. But let's dive a little bit deeper. And before I forget, Matt was talking a little bit about in the last part there, schooling. I forgot to mention Matt is actually a doctor. So I mentioned he's a #1 bestseller, but I forgot to mention Matt is also a doctor. So Dr. Matt Motil is with us. So Matt, let's talk a little bit about income producing properties. You mentioned private money lenders and turning them into cash buyers. Or you turn the cash buyers into private money lenders. Like, is that something that you came across? Like they were open to that? Like your cash buyers were open to being private money lenders?
Well, every time we make a shift in our business, I remember in the last segment I said I like everything simple.
Right.
And for me, simple also means that I have control.
Mm-hmm.
And so I try to keep it as streamlined, simplified, and low key as possible. Because at the end of the day, I think the beautiful thing is with being an entrepreneur is you can really create the life and the lifestyle that you want.
Yep.
And the thing is, if you run your own company or you run your own business, whatever it would be, even if it's just you hustling your ass off, like I got my always hustling shirt on.
I like it.
If you're just a sole proprietor or a solopreneur, as we call it, right?
Yep.
If you're just hustling and you aren't happy with what your normal day looks like, there's only one person to blame, and that's you.
Yep.
Right? I mean, you can make changes. And so the thing was, we were selling a bunch of deals. We were wholesaling a lot of deals. And at the end, it was like, I don't really like this. And it wasn't that I didn't like how things were going, but it was like, I'm not a fan of how things are ending up sometimes. And what my perfect client is really kind of like me, right? Somebody who went to college, got stuck in what I call the middle class trap of, I got a job, my debt now equals my income.
Yeah.
I don't want to work for, 40, 50, 60 hours a week for somebody else. How do I get out of that? And for me, it was using real estate. And so, not saying real estate's the answer, but I was like, look, if you want out of this, I can help you get there, leverage your income, start doing deals, preferably with me, right?
Yeah, there you go.
And we'll get you some cash flowing rental properties and blah, blah, blah. At the end of the day, boom, you've replaced your active income with passive income. And now you can fire your boss forever. Like, that's the message that we've sent. And so I'd have a lot of people that would reach out. And every time I would get on the phone with somebody and I would say, why real estate? And they're like, I want the passive income. And what I realized really quickly was I would say, okay, do you really know what goes into being a landlord? And it was like, no, but I know that real estate's the way to go. And I'm like, well, what if you could have a good return, but at the end of the day, you don't have to deal with property managers, tenants. When you collect $1,000 a month in rent off a property, you don't really know, is that mine, or is it the roofers, or is it the HVAC guy, or is it the plumber, or is it the electrician, or is it, or am I even going to get it, right?
Right.
I mean, maybe I have a vacancy. So there's all these things that go in, whereas as a private lender, you go, okay, I know I'm making 8%, I'm making 10%, I'm making 11%. If the house is vacant, you still get paid.
Yeah.
If I had to go repair a roof on my end as the owner of the property, you still get paid, and you still get paid the same amount. I might actually cash flow negative this month on a property I personally own, but my lenders are getting paid the same dollar amount. So it's a bankable, predictable, budgetable dollar amount. And when I started to educate the people in my sphere that this might be a better route to go for you, there were people, I mean, I was actually kind of honestly surprised when I first started it, that there were people just like, hell yeah, that sounds way better. I got, I was going to do one deal with you and I was looking at this $50K deal, but I got $200K sitting in my self-directed IRA.
Yeah.
You want to take it all? And it was like, damn, the next thing we knew, we had like $2 million in private capital ready to place on deals. And it was kind of a beautiful thing. So
no, that's awesome. And one of the things, even for me, like I would prefer, if like having the capital, I would rather be like, hey, here's 200 grand and you respond back with how much you're willing to pay, 9%, 10%. Like that's like 5-10 times more than you're going to receive at any type of a bank program that they have. Most of them, their APRs are a joke, maybe 1%, 1.125%. You're getting jokes on your CDs. And real estate as of right now, especially in our markets, the Indy market, the Cleveland market, they were very, very stable, especially during the crash. Like we didn't see like major drops in values of homes, and we're still seeing like it's still really steady here as far as like a value. So the risk association with it compared to the stock market or the CDs or even nowadays Bitcoin, which I still haven't dove into. I probably won't.
If we pause for a second, they talk about in marketing, like you should be very polarizing, right? And they also say like, pick a fight with people, and Bitcoin's mine. Dude, I just, I can't get behind it. I can't and I know that there's people that 3 months ago bought it for like $3,000 a coin and now it's over $5,000 and they're going, bet you wish you got in. And I'm like, you know what? Next week when it's at $2,000 a coin, you're all going to be like, bet you're glad you didn't. I mean, I don't know that that's going to be the case, but if there's a fight to pick, that's mine.
I hear you. I've tried so hard to really understand Bitcoin and cryptocurrency and blockchain, and I was starting a documentary on it last night on Netflix that was recommended, and I just got bored after 8 minutes and I turned it off. I'm like, oh my God, the guy from Bill and Ted's Excellent Adventures in this, and he's talking about it, and I'm like, oh my dear, I'm like, I just don't understand this. And for people that are making money in it, great. If it goes somewhere, okay. But I'm so focused on real estate that I don't want to get sidetracked, and I could easily get sidetracked with that trading cryptocurrency, and I don't have a freaking clue on what it really is. It's like virtual trading dollars. So it's crazy. So that's, for me, I love the real estate aspect just because, like I was saying, the risk aspect. You never know with like the stock market too. Like that was one of the things I got started into when I was still transitioning from Countrywide to what am I going to do next? Because I didn't go to school and I was scared out of my mind. So I invested into this trading program, never really understood it. It's just real estate came so much easier to me. And like, I would rather stick my money. Like if somebody said, hey, I've got this great opportunity, you'll get 9% back plus a couple points when we cash you out. I'm like, perfect. That would be such an easier move to do. And I see so many more investors more open to that than, just buying a property straight out from you and being like, hey, is it turnkey? And then you got to worry about them, this and that. It just becomes a hassle. So
right.
Where did you find a lot of your cash buyers before you started converting them to like being your private money lenders?
Well, one of the things that, this is going to sound so simple, but one of the things, because when I was at the time, I was a realtor, right? And so when I first really got into doing the real estate, like when I got to the point where my rental properties were making enough money that I could, do this full time.
Yeah.
I got a real estate license because I thought that's what made sense. And I thought, and a lot of the stuff I was looking at was MLS stuff. Because in the Midwest, you can get double-digit returns off the MLS.
Oh yeah, for
like
sure.
People all the time are like, I don't want to see on-market deals, and I go, why? You're good numbers.
Yeah.
And I get it. Like, you can get better numbers off market, but like if you can get 12, 13% return on an on-market deal, why wouldn't you look at it? So I was looking at a lot of on-market stuff, and I thought, I was tired of waiting on realtors, and so I thought I'm going to get my license. And so once I had MLS access, I realized I could reverse look up cash purchases.
Yep.
On the MLS.
Mm-hmm.
And I realized really quickly, I'm like, okay, well, if I look in these zip codes that I think are good places to find deals or that are good places to do deals in, it was like, man, I can look up and see every cash transaction that took place in the last 10 years.
Yeah.
Now, I would go back about 12 months,
right,
and I would rip that data, and then I would send it to a VA. I had a VA in Venezuela for a while, and I would send it to Jose, and he would literally go to the county's website. He would grab the information of who the person was, and I didn't worry too much about entities at the time. It was just I want to see individuals.
Yeah.
And then he would skip trace them, get names and numbers, and I just started calling people.
Nice.
And just say, hey, I know you bought a cash deal in the last whatever, and I'd have the address there. I'd be like, hey, I'm calling you about 123 Main Street. You bought it in cash 6 months ago. I got deals like that all the time. If I come across a deal like that, would you be interested if I sent it to you? And the thing is, no one ever says no
right.
to that. It's like, oh, you've got this hot deal at like 50% on the dollar. Nah, I'm not interested. They always say yes.
Right.
And so then I would, just get their name, email address, and phone number, and just make sure it was the right information. And I just add them to my buyers list. So it takes a little bit of work, but it's that kind of thing. And honestly, if you had a good VA who spoke well on the phone, there's no reason they couldn't be making those calls and getting that information as well.
Exactly.
And I see people in town. I just got one. Let me see. I had it on my desk here, and I won't be able to find it now. Oh yeah, here it is. So I just got a postcard in the mail from a buddy of mine.
Oh, cool.
Who is a wholesaler in the area, and because we bought a house we buy houses cash.
Yeah.
And we buy them in LLCs, and so he didn't realize it was me, and so he sent me a postcard basically saying, hey, I've got deals like you just got, can I send you more deals?
Oh, that's awesome.
And so he's sending postcards out to people, and it's got his phone number on it. And so it's just a way of, kind of reaching out and seeing who's out there, and you don't have to do the legwork. But VAs are so incredibly cheap. Like,
They are.
and a good VA, it's amazing what a good VA can do in like 8 hours.
Yeah.
When, you know,
It's
for
crazy.
and so you spend like $3 an hour. So, you know, they could call 2,000 people in for $20.
Yeah. And the crazy thing is, most of these people that we're finding in all these other countries, they have like MBAs, they have doctorates.
Yeah.
They're so
That's how my
intelligent.
guy was.
Yeah,
He
they're
was
so
like
intelligent.
1 semester away from having an MBA.
Yeah.
And I'm like, damn. And I even asked him, I said, what do you want to make an hour? He's like, because I didn't want to set his wage because, I mean, to me, it's offensive, right?
Yeah.
I mean, hey, dude, what if I paid you $3 an hour? So I asked him, what do you want to make? He said, well, I'd be thrilled if I made $375. I'm like, great, done. Here
Yeah.
you go. And then I asked
That's a
him,
no-brainer.
who makes more? He was in Caracas, and I said, who makes more in Caracas than you if you make $375? He said, the only people that make more than me would be the people that work at the U.S. Embassy.
Oh, wow.
That was it.
That's
Like,
crazy.
doctors, lawyers, dentists, like he was making more than all those people working for me, making $375. And I'm like, dude, that's half of minimum wage. Like, I'm thrilled to, and you know, and he almost had a master's degree.
Yeah.
And you never would have, I mean, he had a little bit of a you know, Hispanic accent, but
Yeah.
aside from that, like, you never would have even thought that he didn't live in Cleveland. So I got him a Google Voice number,
Yeah.
and he had an iPhone. And so we could iMessage. So like we would text,
Oh, that's cool.
and then he would call people from the iPhone with his Google Voice number, and they didn't know that he wasn't sitting in Cleveland in my office. It was great.
And the thing is, they do work so meticulous as well for you, because in all these other countries, they really have customs that they go by, and they if they get hired by somebody, they treat them like the world. Like they go above and beyond. One of the things that I'll mention too, for some people that, you know, might be listening and wondering, the things that you want to do is, especially if you hire a VA and if you keep them on for a good period of time, it's customary to give them like quarterly bonuses. And that's something that I learned in Tim Ferriss's book, the 4-Hour Work Week. He mentioned that, and I didn't understand it, but it's very customary, especially if they start working with you. We've used Upwork to find people, and there's other sites
That's where I
out
got
there
this
as well. Oh, cool. Nice.
Yep.
And you know what? The thing I like too, what you said, is giving your cash buyers a call off of the reverse lookup off of the MLS. It's so easy to do. And if you get, let's just say you pull 75 cash buyers, you're going to get quite a few people like right off that onto your list right off the bat. And then converting them to cash buyers is just simply having a conversation with them is what I would do. Is I would just be like, hey, we've got this phenomenal opportunity. You know, it's a opportunity for you to make XYZ. And obviously you have to be careful with the way you approach them from an SEC standpoint. But as long as you've got that relationship, Matt, after, I believe it's 30 calendar days is what the SEC wants to see before you approach.
Everybody gives you a different version of that. I've heard 30, I've heard 45 days, but somewhere around there. You know, I'd say 4 to 6 weeks.
But no, if they approach you first,
three
though,
then touches.
Right. But if they approach you first, it's totally different.
Yeah, totally different. And depending on who they are, you know, if they make at least $200K a year and they can show on paper that they've made $200K for at least 2 years, then they're technically an accredited investor.
Yeah.
And at that point in time, the SEC is like, hey, no holds barred, do whatever you want, because that person makes enough money that they can, according to the SEC, afford to make their own mistakes.
Yeah, that's true. That's true. And what we're going to do is we're coming up here, we're going to talk a little bit more about the private money. Since Matt just brought up, we'll go ahead and talk about accredited versus non-accredited. Like, who would you want to work with? Like, who's your dream client? We'll talk also too. Matt found some deals that we talked about on the phone not too long ago, that he was able to find these deals on the MLS, and literally 2 hours later, he's like, dude, I got a cash buyer on it. Like, instantly, I was like, man, that's awesome. So we'll talk about those deals as well coming up here. So stay tuned, stay in your seat. We're going to come right back here with Matt and some of the awesome things he's doing in the Cleveland market.
I hear from real estate investors how much of a challenge it is finding motivated sellers. This is happening all over the country. Real estate investors not knowing where their next deal will come from. I can tell you on page 141 of my book, Right Flipping Now, I address how you can easily find deeply discounted off-market deals. The 98% of investors out there don't have a clue about this. You can easily duplicate this process within your own business today. Grab a copy of my book now at getmyflippingbook.com, and you can start finding deals for 50, 40, and 30 cents on the dollar without any competition. I have copies of my book available right now at getmyflippingbook.com, and you can have a step-by-step plan for making profits within the next 30 to 60 days. Go to getmyflippingbook.com. That's getmyflippingbook.com. It's www.getmyflippingbook.com.
Hey there, it's Jason Lucchese. Welcome back to the No Flipping Excuses show. I am here with Dr. Matt Motil out of Cleveland, Ohio. This guy's doing some awesome stuff. We've been talking about how to find cash buyers, how to give the right returns to these cash buyers, and really how to set up a business to where you could have income producing properties paying you every single month. That's what a lot of investors love and like to hear, is how they can get into this business without using a lot of their money or possibly zero down strategies, but getting the income coming in every single month. That's what a lot of us really work for. So Matt's been talking to us about that. Matt, let's talk about some of the things that you're doing as far as setting up private money. Like, what's the typical terms look like, and are you giving them like first lien position on the properties that they're giving you lending for? How's that typically being set up?
Well, when we first started doing it, when we first started doing it, it was kind of like, okay, I got all these deals. I'd love to just keep them myself.
Yeah.
And it was kind of a confidence thing where you go, well, I'm not sure if anybody's going to want to do this. And so we kind of went into it saying, hey, I want it to be a win-win for both of us. I obviously need the money. And as long as the deal can stand on its own 2 feet, then I'm okay paying you a rate that, makes you feel like you've won.
Right.
You mentioned in the last segment, like I actually took a picture the other day. I was at the bank and their 18-month CD was at 1%.
Ooh.
And so you got to lock your money up for 18 months to get a 1% return annualized.
Jeez. And
so the thing is, if there's somebody out there that's got money in an account like that, or even in a bank account that's making like 0.025%, if you offered them 5%, they should be falling out of their chair.
Yeah.
Right.
Right.
And the thing was, we get a lot of people that know real estate's high yield, and they go, oh, I want to make 15%. It's like, well, yeah, me too.
Right.
And at first it was like, well, can I make 15% work? How does that work? And I am in a mastermind, with Mark Evans. And so I called up the DM and I'm like, hey, how do I make this work? And he gave me some strategies, which was really cool. And at the end of the day, his advice to me was like, look, keep it simple, keep it easy. And he's like, and if it's expensive, but it's super easy, then make it work. Make it, figure out a way to make it work, because that's the kind of relationship that you want to have. Like, he's always talking to me about living in abundance. And he's like, dude, you just gotta, you gotta open yourself up to the universe of saying like, I want it all. Like, let it all come to me. And can you, how do you say yes? Just figure out a way to make it work to where it makes sense. And we've got some cool strategies where we can pay people a little bit higher than maybe what they would even expect. But at the end of the day, the average deal we're doing is anywhere between 9 and 12%.
Oh, that's awesome.
For private. And we've got a couple people that, and I as a salesman, right, I always go in and I go, well, what rate would really make you happy?
Yeah.
And let them throw out a number, because the last thing I want to do is go, well, I could pay you 10% on this deal. And they're thinking like, shit, I was cool with making 7. And now you just offered me 10. So yeah, I'm going to take 10.
Right.
So let them throw a number out first.
Oh yeah.
Because if they've got money parked in a CD making 1% and they're in their mind 6% would be amazing, they throw out 6, and then all of a sudden, like, you put them on mute, you're doing the happy dance, you're like, hell yeah, I'm going to make 6% on the spread on this deal. This is amazing. But it's funny. Just like when you tell people I can buy houses for $8,000 or $5,000, and you're like, well, where are they? They must be in the hood. It's like, no, they're actually in decent areas. And people go, nobody's going to sell you their house for that. Well, yeah, they will. And people will also lend you money at ridiculously good rates too. It's just a function of having that conversation, and it needs to be a win-win. So
Yeah.
we do try to do each one as its own thing. We're also in the process. We actually are in the process of working with an SEC attorney right now of setting up our own fund
Oh, nice.
to where we can bring people in. And this is the tricky part is, a lot of people out there have funds. A lot of people, the minimum buy-in somewhere between 25 and 50K to get into the fund. And that really prices a lot of people out, because while there are lots of cash buyers out there that have $50, $70, $100,000 in cash to do deals with, the average person, especially the people that I'm attracting with the message of like, hey, use real estate, fire your boss, blah, blah, blah.
Yeah.
They're salaried employees. They don't have $25,000, $50,000 liquid cash. They just don't, because they're a W-2. They're living on a fixed income to a certain extent, right? As a salaried employee, they've leveraged themselves to their eyeballs, because that's what we do in middle-class America.
Right.
And so those people don't have this mad stack of cash that they can go and invest 50 G's into a fund.
Right.
So we're trying to work it to where the minimum buy-in can be more like 5K, and then we can still get you an 8% return even on a $5,000 investment. And yes, there's a lot more moving parts and pieces to that, but at the end of the day, it comes down to who am I trying to help,
Right.
and what are we trying to do? And for me, it's like, yes, there's going to be more parts and pieces to a fund where you can buy in at $5,000, but those are my people. That's my tribe.
Yeah.
These are the people I'm trying to help.
Mm-hmm.
And if you've got $6,000 sitting in an account, you go, I'm going to give Matt 5 of it, and he can use it to do real estate deals, and he's going to pay me 8%. Then they're winning, because, otherwise, because there's nothing you can do with $5,000.
Right.
There really isn't,
Right.
unless you're going to go buy an FHA house you want to personally live in,
Right.
which I do. We started talking about that, like house hacking. If you want to get in the game, that's a good way to get in. As long as your significant other is cool with moving like every 12 months.
Right.
But, but aside from that, like, there's really nothing you can do with $5,000. So now we're giving people the opportunity to get in the real estate game. They can tell people, I'm a real estate investor, because the fund's invested in real estate.
Yep.
And the money's secured in multiple real estate deals. And we're just telling them, hey, you're gonna have to lock it up for at least a longer period of time. I don't know what that looks like yet. We're still hashing it all out with the private placement stuff, but
Right.
it's pretty exciting. We're gonna put like a $10 million cap on it, so we're gonna try to raise $10 million.
No, that with what you're saying, it should come through. If as long as you're having, it sounds like you're going to probably have both accredited and non-accredited investors in there. The other thing is that I wanted to kind of rewind just a little bit for folks that may not know this. And I really liked what Matt said about letting your private investors shoot the number out, is because if I throw out to maybe somebody that's bought a couple properties from me and I say, hey, Matt, I could give you 12% on your private money, some people may get a little intimidated by that. They may think this might be too good to be true. And then they might get scared off, and they're like, man, that guy's running some sort of Ponzi scheme.
Yeah. I mean, we actually had to change a lot of our emails, because we were getting deals where legitimately at the purchase price with the rental rate and holding money back for reserves and all that kind of stuff, we were seeing deals like 15, 16, 17, 18% return, and we were getting no bites on them. And I'm like, what the hell is going on? Nobody's interested. And a couple guys in my mastermind are like, the return's too high.
Yeah.
People think it's BS.
They do.
And so we stopped putting percentages on there, and we just started putting cash flow numbers. So
Yep.
it was, instead of saying, hey, do you want to make 18% of your money? Because people think like real people in the investment space, like sharks in the investment space, they look at returns that high and they go, that's too much risk.
Yeah.
There's got to be too much risk in it to make that kind of return. So, bring it back around the 10% range, and then people are more interested, which is really odd.
Yeah, it is.
But it is the case. So that being said, like, we started putting cash flow numbers on it. So it was like, do you want an extra $600 a month in your pocket every month? Like, that's our subject line, right? And same deal, same numbers. Now we're getting hits on it because people can tangibly understand the cash flow piece, and they're not being intimidated or scared away with this high return that they think is kind of fake.
Exactly. And once you start doing that, I really like that the emails that you're coming up with and advertising it more as a cash flow opportunity, because you're going to get more people. And one book that I would recommend that's really good, especially when it comes to pitching, Pitch Anything by Oren Klaff. He talks about being on, different types of, allowing certain people to have frames, and he talks about frame control. It's all about having the frame. Even though Matt is saying, hey, what number would you like? It's still Matt's in control of the outcome there. So that's a really great book to get, Pitch Anything by Oren Klaff. I highly recommend it. But yeah, that's a great point there, and really being able to advertise it, and then putting together a private placement memorandum. That's probably a totally different episode that we can get into, because
For sure.
There's a lot of ins, lots of outs.
God, the questions they ask you,
yes,
you're just like, what?
Yeah.
I mean, it's like if a bomb went off in California and the ripple effect of, ended up in Cleveland, Ohio, and you fell into a crater, who would take over the fund? You're like,
yeah.
What? But it's literally, you've got to cover like every possible. I mean, obviously that's not a real question, but they really want you to cover like every possible scenario, because I mean, really, the reality is, if we can do what we say we're going to do and really raise $10 million in funds, I mean, that's a legitimate powerhouse of opportunity, not just for us, but for other people.
Oh yeah.
And you go, what if I got hit by the beer truck on Friday?
Mm-hmm.
Like, who's managing this thing?
Mm-hmm.
There's a lot of money at stake, and there's a lot of people involved.
Oh yeah, absolutely.
And so, it kind of comes down to that. And part of it was like, man, this is a lot of work. And then the other side, you go, yeah, but this makes total sense.
Yeah, because
I would want somebody betting their fund the same way.
Yeah.
If I was just going to blindly, and I don't say blindly, but the thing is, obviously I'm the brand ambassador for what we're doing. And people do deals with us. People give money to us because they go, I like Matt. He seems real. I think I can trust him. So here you go. It's going to be the same thing with the fund.
Yeah.
And at the end of the day, you want to make sure that somebody smarter than me has asked all those right questions and got all the right answers, and then double checked it and said, yeah, cool. All right, go ahead. Pull the trigger and start filling the thing up with cash.
Yeah, no, absolutely. And the cool thing too, if for those that are listening, the cool thing is once you have like a $10 million PPMs in place, you can now go to like hedge funds that are wanting to sell off some of their assets that they don't want anymore. A lot of them are wanting to liquidate now. Imagine you go in there with a $10 million proof of funds letter. You are in a totally different ballgame compared to Joe Schmo that has, a $50,000 proof of funds letter. You're now getting blocks of properties that are at phenomenal discounts, because a lot of the hedge funds right now are only wanting to keep properties that are either, I think they're right around $1,200 to $1,400 per month in rent that they want. All the other ones, they're liquidating them because of how it's placed in the description of what they do with properties in their private placement memorandum. So it's a huge opportunity, and I know we could definitely cover that in another episode here. And I know Matt's gonna get that 10 million pretty quickly. So it comes to some pretty good stuff here. But coming up here, what I want to really discuss here coming up is some of these deals Matt's finding off the MLS. That here, especially in the Midwest, we come across great deals on the MLS at great discounts. You could still make 5-figure deals like 5-figure profit wholesale checks off of the MLS. So we're going to, and sometimes 6 figures too, if you could structure it the right way. So we're going to discuss that here. And we're also going to discuss some other awesome things here that Matt has going on. So stay tuned. Let's talk about some MLS stuff here that you can get deals right now that exist on your current market. So stay tuned. We'll be right back.
Are you facing a roadblock with getting started in real estate? This is an obstacle a lot of brand new investors face. Building a rock solid foundation is key to building your investing empire. I can tell you on page 95 of my book, Right Flipping Now, I address how you can build a lasting foundation that won't topple over when you're on the 3rd floor. Do not avoid laying the proper foundation for your business. I've made this drop dead simple for you to just rip off and use within your own real estate investing business. Grab a copy of my book now at getmyflippingbook.com, and you can have the confidence you need to find and flip deals consistently month after month. I have copies of my book available at getmyflippingbook.com, and you can have a step-by-step proven plan for making profits on your very first deal, or maybe that second deal, closing within the next 30 to 60 days. Go to getmyflippingbook.com. Getmyflippingbook.com.
Hey there, it's Jason Lucchese, and welcome back to the No Flipping Excuses show. I am here with my good friend, Dr. Matt Motil out of Cleveland, Ohio. He's a phenomenal real estate investor doing some pretty amazing things with cash flow, income producing properties, some wholesaling. And what I wanted to dive into, because we've been talking a lot about cash buyers, how to turn them into private money lenders, and how to do, some simple stuff with getting those cash buyers turned into private money lenders. We're going to kind of switch gears now and talk about the whole finding of the deals, especially Matt's using some cool things along with us. But I wanted you to hear it from somebody else that's doing it outside of the No Flipping Excuses team. Matt's doing some cool stuff with finding deals on the MLS. So let's talk about that a little bit here, Matt. Let's talk about some of the deals that you're finding on the MLS and what you're doing to get them at good discounts.
Sure. Well, I mean, we set up search criteria on the MLS, and anytime a deal is in a certain area and it meets the right criteria of what we're looking for and it's below a certain price point, obviously the team gets pinged, and then we just have a formula that we know, okay, this is what it's going to rent for. We back into a percentage, and then we back a fee off of it. We assume a rehab number and we go in with a price. We get, and then we go straight to the listing agents with offers. And we found that doing that versus having our own agents, we got a much higher conversion rate because the listing agents are more motivated because they know they're going to get both sides of the deal.
Yeah.
And so I would say we get probably between 30 and 40% of our offers on the MLS.
Nice.
And then we send in our own inspection team, and they do an awesome job. They take a ton of pictures. They also have construction backgrounds, so that when they come out, it's here's a report, here's a bunch of pictures, here's what it's going to take to make it rent ready, and here's an estimated rehab cost to get it to that point. And then we go back and we attempt to renegotiate the price if possible on the deal. Sometimes we can make the deal work even if they say no. Other times the deal falls apart. It just is what it is.
Yeah.
But, like I was saying earlier in the show, I mean, if you're in the Midwest, you're probably in a market where the price point to rental rate is so good that you're going to get good deals off of the MLS in like B and C neighborhoods without having to do a whole lot of effort. I mean, you still got to come in, and we're not lowballing. Like, we're not making 50 cents on the dollar offers. We're cutting deals off of, we start at the right price point to begin with, to where if we sold the deal at MLS list price, it would be 11% return, or it'd be a 12% return, or whatever it would be. So like, that's what we're kind of targeting as a price point, because there's nothing worse than going to a buyer and being like, hey, I got this hot deal. And then because the first thing they do, especially if they're not local, is they're going to look it up on Zillow.
Right.
So they go Zillow it, and then they go, wait a minute, Matt, you're selling me this deal for $70K, but it's on the MLS for 55. Like, what are you trying to do? You're going to look like you're trying to pull one over on people really fast. So you can't sell anything for more than what it's on the MLS for.
Right.
That's the first rule of MLS wholesaling. You can't sell it for more than what it's on the MLS for. The second thing is, so you got to start at the right price point. It's got to be a deal at the MLS price. And then you can work your way off of that with repairs plus work your fee into it.
Yep.
I get guys all the time that ask me, they go, hey, I'm consistently making 5K on deals. I'd love to make more. And I go, well, offer lower. And it sounds so simple, but at the end of the day, if you come in and the MLS price is going to work and you cut the price by 5K and they accept your offer, well, you ain't going to make more than that. You know what I mean? So you got to start with the right price point. And then at the end of the day, the thing that you have to realize is if you're in the Midwest and you're listening or you're watching right now and you go, okay, great, but everybody here can get these deals. Yes, that's true. But the people you're selling to aren't here. And they need somebody like you to hook them up with that deal. And that's really where we've kind of found this niche is I've got people from literally all over the world now that are on our buyers list that go, I'll take a 10, 11, 12% return every day of the week if they're in solid areas. And we can give them that. And the reality is if I can get it under contract for 10, 15,000 less than what they're going to buy it from me for at the end of the day, then it's a win-win.
Yeah.
They don't have access. I mean, they're in California. They're probably taking negative cash flow deals because they're expecting an appreciation play. Whereas here, they can come in, buy a house for 50 grand, where 50 grand isn't even a down payment out there. And they can get into a cash flowing rental property that's relatively ready to go for 12% return. And they're thrilled.
Yep.
They don't care. I mean, they shouldn't care that you're making $1 or $10,000 or $40,000. At the end of the day, they're getting a great deal that they wouldn't have access to without you. So you're performing a service, and it is what it is. Like I said before, I was a realtor, and so I had kind of had to figure like, how do I do this and make it sure that I'm not going to get fined? Ohio is one of the strictest states in terms of wholesaling.
Yep.
And so what we ultimately realized that the best thing, the easiest, cleanest is we just double close everything. So we actually close and then we'll go to the buyer and we close with them. The nice thing with that too is they don't know what your fee is at that point. When we first started doing stuff, like when you and I talked about a couple of deals, back almost a year ago now, it was like I didn't have any money. Like I was broke.
Right.
And I had been struggling to be a realtor, and I really wasn't doing any wholesaling, and I really wasn't, so we had rental properties that were covering the bills, but it was like I was struggling to really kind of have that break off point. And so I was like, nobody told me I couldn't get my fee up front. So I would just tell guys, I'm like, all right, here's the deal. The price of the property is, 60 grand. I'm going to send you a contract right now. You can e-sign it. And then tomorrow you're going to go to the bank. You're going to wire me 10 G's. And they'd be like, all right. And then tomorrow they'd go to the bank and I get a wire for 10 grand. And when I would tell people that, they're like, you can do that? And I'm like, well, nobody told me I couldn't, so I did.
No, I remember you sending me that through text. You sent me a wire that you received $40,000 for. And I was like, wow, that's awesome. And not a lot of people are doing that because that's another zero money down strategy. Another one, because I'm really big on the double close too, because it shows proper chain of title and it avoids the whole assignment thing. I'm not super big on assignments. If people use it,
either.
Cool. I would just recommend obviously talking to an attorney, but you could always use like a transactional fund or two if you want to. I think the one that we recommend is at 1.75% for the day.
That's if it's over 100K, I think.
Yeah, it is over 100K.
Most
You're right.
of them are two G's as a straight deal. If it's under 100K or 1.75 if it's over.
Right, exactly. Or you could do what Matt did. Just get it up front and you could avoid that altogether.
Yeah, and we still double close, but
yep,
they've paid our fee from the get-go. Now, the only bad side, and I will tell you this, like this, we knew this risk going in was obviously if the buyer doesn't close, then they lose their money, right?
Right.
But the thing is, if the deal falls apart and it's not the buyer's fault, they get their money back. Like we make sure that was in the contract because again, it's a relationship thing. If the seller does something and like they don't have a transferable title and the deal falls apart, like that's not the buyer's fault.
Exactly.
So the buyer shouldn't be out their money. So we did have a couple deals where we had collected like these monster fees, like that $40,000 one that I sent you the text on.
Yeah.
Like that was a home run. Like I was so excited about that. We ended up giving that back because the deal, there was something with the title and it wasn't clear. And then, so the guy's like, well, I get my deposit back, right? And I'm like, yeah, of course. Well, the thing was, you know, when you get like a home run like that, the first thing you do is go out and buy a bunch. So we were like, oh yeah, this is great. And then when the deal didn't happen, I was like, oh, now I owe this guy his money back and I don't have it literally sitting here in this pot ready to go. And so I'm like, okay, I gotta figure out how I revenue up a bunch of cash so I can pay this dude back his money. So there is a risk involved in getting paid up front, obviously, because if you aren't disciplined enough to take it, go stick it somewhere until the deal closes,
Right.
when it really becomes your money, then you do run into a risk of you may have to give it back. And if you've used it for like operating income and things of that nature, you've really technically used somebody else's money to pay your own bills, which you may have to do. Like I get it, it's robbing Peter to pay Paul, and in early stages of business, you got to do what you got to do.
Yeah.
But you do run that risk, and we learned that lesson the hard way. So it is actually cleaner just to do a double close, get your fee on the back end when you close. You know, if there is a transactional funding fee, it gets paid out of that, and then you're not having to be so disciplined that you're not using somebody else's money to pay your payroll and things like that.
Right. No, exactly. And you know, I could see that for sure. And one of the things, no, those are great points. This has been phenomenal content, Matt. One of the things, what I was saying, like in the very beginning of the show, Matt is a #1 bestseller. He's got a phenomenal book out. I've got it right here. Man on Fire was released beginning of, did you release it end of 2016 or was it beginning of 2017?
No, February of this year, 2017.
Nice. So I highly recommend that you go and get this book. Matt, what's the link for that?
We give it away. You can get it on manonfirebook.com.
Yep.
And that's just going to get you a link where you can just plug in your information. We ask you to just pay for shipping. We give you the book for free. And then Jackie over in my office here will send you a copy.
Nice. Yeah, it's nice. It's a good soft, it's a paperback, and it's
just like your book.
It is just like, it is. Matt's got what? This is 229 pages, 25 chapters of good quality content.
It's easy reading. I mean, I think there's a lot of people, I was flattered because a lot of people would tell me, they would hit me up on social and they're like, hey, I got your book. And I'm like, cool, thanks for getting it. And they would say, I couldn't put it down. I finished it in 2.5 hours. And which, you know, guys would tell me all the time, they're like, I'm not a reader, but I couldn't put it down. I finished it in 2.5 hours. I finished it in 3 hours. So that's about where it's at in terms of reading time. So It's not it's a fast read. It's big print.
No, it's a good book. I did the same exact font that you did in my book, and we both had phenomenal editors as well, and it's a good book. Highly recommend it. It's manonfire.com, correct?
On Fire book.
Man on Fire book.
Man on Fire was already taken because there's a Denzel Washington movie by the same name.
That's right.
And it's funny because like there's a lot of like even the other day somebody posted on Facebook where they were like holding the book and they go, I just got Man on Fire. I'm one chapter in and I'm hooked. I can't wait to finish it. And then there was like 2 comments that were like, oh, I loved the movie. And I'm like, well, they haven't made a movie yet. And you know, I'm not sure who would play me.
Yeah.
It'd have to be like super tattooed and cool. I don't know. Maybe David Beckham could play me because sometimes he shaves his head.
There you go.
So
Yeah,
David
we all have the
Beckham-
same barber.
No Flipping Excuses podcast. David Beckham's going to play me in my own movie. So
Nice, but you don't have that accent. But he can
Right.
make he can
That's
make
okay.
Yeah, he can make it work.
That's all right. It's
Nice.
a artistic license, right?
Exactly. And for those that are listening too, how can they get a hold of you if they want some of your awesome properties there in Cleveland?
Easiest thing to do is, I'll just be perfectly honest. You get the book, it's going to put you in the funnel, and then you're going to get on our list, and you're going to get properties. But if you don't want to, get the book, you can go out to the website, drmattmotil.com, and you can do that. We've also got a really easy way. Just go to drmattsdeals.com, and that's a sign-up list. So if you're looking for deals, double-digit returns in Cleveland, or you're interested in being a private lender with us, you can go to drmattsdeals.com.
Cool.
And sign up there.
Well, yeah, I highly encourage you to get the book. Matt's got it for free right now at manonfirebook.com. You just go there. I think you just pay the shipping and handling, and Matt's going to send it out to you absolutely for free. So go do that. It's been phenomenal having you on here, Matt. What I highly encourage you to do, if this is your first time listening, leave us a good review. Matt's looking at you right now through the screen, so make sure you do that. And
I look a lot tougher than I am when I'm all tattooed and stuff, and we will find you if you leave less than a 5-star review.
So make sure you subscribe. Any final words from you, Dr. Matt?
If you're listening or watching and you haven't done a deal yet, the biggest advice I would give you is there's no better time than right now.
Yep.
Get off your ass, go do a deal. There's never going to be that perfect time. You're never going to have the right amount of money. You're never going to have all the things that you keep telling yourself in your head. So no flipping excuses. Go do a deal. You can get one done. It's only Wednesday as we're recording this right now, so you can still get a deal done by the weekend. So go do it.
Absolutely. Awesome. Well, cool. Thanks again. Make sure you go get Matt's book, manonfirebook.com. It's been a pleasure having you on here for this episode. Make sure you subscribe. We release our episodes weekly. Sometimes we release 2 in a week. Just depends on our schedule because we are in the trenches. We are full-time real estate investors. So I will talk to you on our next episode. Make sure you subscribe. I will talk to you later. Take care. Have a great day. Bye now.
Thanks for listening. For show notes and links to anything discussed on today's program, visit noflippingexcuses.com. If you'd like to call the show, dial 317-900-1307, 24/7. Leave a message with your first name and where you're calling from, and include your question, comment, or concern. Who knows? You might end up on the air with Jason Lucchese. If you like the show, be sure to subscribe on iTunes or Stitcher. The links are posted at noflippingexcuses.com. Remember, you can close more deals now, make your own rules, and design and live an amazing life without having some jerk-off boss tell you what to do. Share noflippingexcuses.com with like-minded people you know who are ready for badassery, crushing it in real estate, and enjoying freedom to whatever you like, whenever you like it.